Ladies and gents, since the last time we made an update video on this channel, we've actually been seeing about $30 billion on the global crypto market exchanges getting completely liquidating, resulting in most altcoins dropping down anywhere from 10 to even 30% all around the board. Hopping into Twitter, we did receive this tweet from McDonald's just a few hours ago saying, "How are you doing, people who run crypto Twitter accounts?" with a response from Michael Saylor, who states, "Doing whatever it takes to acquire more Bitcoin." Some very odd times we live in right now, but in this video, I do want to make sense of everything going on in the market, the economy, the central bank policy, and everything that you need to know today. After doing some research, I found 6 reasons why the crypto market is down in price, and this is going to give a better explanation and some better moves that you should make as an early investor. Towards the end of the video, I'm going to wrap everything up so you guys have a step-by-step game plan and know what mindset you should have in making sure that you're able to come out on top. Now, before we get started with this video, guys, like the usual, if you do appreciate this content, don't forget to drop a like down below and subscribe to the channel. If this is your first market crash, your first correction, I can tell you, I know what it's like to feel scared. I know how upsetting it can be looking at that portfolio and seeing the amount of money drop, thinking I knew I should have sold just a few days ago, but there is light at the end of the tunnel, and we'll be sharing more about that towards the end of this video. Now, first things first, the global crypto market cap, yes, indeed, is at $1.65 trillion. Bitcoin, though, however, did have a little bounce up. So a lot of people are wondering if right now Bitcoin is going through a little dead cat bounce. If you don't know what that is, just think about a dead cat like falling out and then it just bouncing. People think it's alive, but it's just a dead cat like bouncing up, you know, from the bottom pit. Y'all know what I mean. Anyways, many people aren't sure what we're seeing in the market. If we pull the charts out to the last 1 year, obviously we are still seeing a little bit of that recovery right here. Just a little blip on the scale. Going into the 1 day, you'll see that even at the lows of today, going towards $33,000, we had a pretty decent rally coming out of this hole and now sitting at $36,000. Now, I really think it's hard for anyone to predict the future, but I think by just taking a look at some simple data that we're going to go over in this video, we can get a better indication on what may happen next. If we do take a look at the 1 day, obviously the opportunity, if you were to enter more positions into Bitcoin, looks like $33,000 was the bottom, but only time will tell on whether or not we're going to continue this recovery up or whether other factors going on in the world, such as the FOMC meeting happening on Wednesday, may affect the crypto market as well. All eyeballs are on this week for the Wednesday meeting, and it looks like this is so important because of what we're going to mention. Get started with this video. Let's take a step back from all the things going around in the world. Yes, the stock markets are in a doozy right now. Yeah, we're getting a lot of mixed news from central bank policies. We're also getting some additional news of Russia, Ukraine colluding together and some of the dangers we may see on supply chain and the overall welfare of this nation. But let's take a step back and get an idea of what we've experienced just in the past few months leading up into this moment here. So to kick this off, I got an article here from CNBC stating 1 in 3 Americans overspent during the holidays, boosting credit card balances. Americans went all out this holiday, spending much more than the year before and in some cases more than they could afford. Roughly 1/3 of shoppers went more than $1,000 into debt, according to a report. So generally the beginning of the year is rather slow for most industries all across the board, especially restaurants. I can tell you this now from being a restaurant investor, we are definitely seeing sales slow down, and apparently this is actually a repeated theme that happens all along every single year. This is a result due to a few things. Cold weather, people tend to be more indoors, people have their New Year resolutions, and obviously from what you can see from this report, a lot of people overspend during the holiday season. They're getting that credit card bill statement now and they realize, maybe I can't go out as much as I thought I could. When your average American is seeing debt across the board and that feeling, that mindset of having more wealth goes down, we're not going to be seeing as much liquidity or people with the intentions of wanting to invest in the market. Now, that's not the only reason why we may be seeing a reflection in the crypto markets alongside other equities. You got to keep in mind also, this is tax season of 2022. We've had many external factors from the pandemic, like stimulus checks, the helicopter money, a lot of the unemployment checks, and other additional benefits like PPP, SBA loans that many people are now trying to figure out how to report and file properly. No matter how much money you make, whether you are in the lower bracket or you are in the top 0.001 percentile of the group, you are going to be thinking about taxes. And when people have a bill in the back of their mind, oftentimes this is going to play into the additional reason of not wanting to invest, but wanting to save that money, realizing some gains, and also seeing the reality of the situation, knowing that you're going to have to pay taxes in just a few months. In addition to that, we've seen a lot of correlation coming from how the stock market performs and what crypto does as well. The idea behind this is because these are still considered more speculative assets, and it's also due to the fact that many people invest into the stock market, trying to make money, trying to combat that huge inflation rate that we've seen a report of coming out in December of 7%. Stock markets, obviously, they have not been doing well. If you have money in crypto, chances are you still have a couple bucks or some small position in the stock market as well. This may come from your 401k, this may come from a Roth IRA, or simply just your casual leisure Robinhood account that many people use for recreational use, trying to make some money on top of their savings. Well, as you can see, within the last 5 days, stock market has been getting wrecked. Today, we are still seeing a little bit of that bounce, and coincidentally, that is when crypto today has also been improving just a little bit. Now, while the S&P is still down in the last 1 month about 8%, and in the last 6 months, still rather flat, in the last 1 year, this correction in the grand scheme of things isn't necessarily too bad. Now, if you guys are following along what's going on in the stock market, you'll know that tech stocks have been getting hit the hardest. This is also coming into the fact just inflation plays into the role of how much money this is going to be worth and all the overvaluation we were receiving when everything was going on that major bull run. Although it does seem grim when a lot of these markets are down, you have to realize that anytime we see a correction, anytime we see a pullback or the bears start screaming a little bit louder, or McDonald's comes out with a tweet, stirring up a little bit of the beef with the crypto community, this is when you have to realize that this is going to be a buying opportunity for anyone who's been waiting on the sideline, and this is also going to create that new foundation for investors to get back on board. Unlike the stock market, where it looks like we're not seeing heavy liquidations happening all across the board, crypto, this is something that happens pretty commonly. In the past 24 hours, we've been seeing about $488 million in crypto liquidations happening, or otherwise 135,000 traders getting liquidated on a day-to-day basis. A lot of people tend to use over leverage for crypto, and when we do get this much price volatility and you are forced out of those positions, that's when we see that tumble roll in and roll in again until we can wipe it out completely and start building crypto on the foundation of real money, cash money that people are putting in, not fake leverage that you have to get loans out of that place us on some pretty skinny stills. When I say skinny stills, just think about like a clown on stills, like me. So in addition to all of that, what I've been stressing a lot in my videos is central bank policy. What is Mr. Jerome Powell going to do with his money printer? What are we going to see with the assets that are getting purchased? Where are we going to be with interest rates in the near future? And this article right here does a really good job of breaking everything down and giving us a clear-cut picture on what to expect. So they state here on the face of it, the 26th of January 2022 Federal Open Market Committee meeting should be a non-event. Speaking at its Senate confirmation hearing on January 11th, Federal Reserve Chairman Jerome Powell set out a clear timetable for events, and he stated, as we move through this year, if things develop as expected, we'll be normalizing policy, meaning we're going to end our asset purchases in March, meaning we'll be raising rates over the course of the year. At some point, perhaps later this year, we will start to allow the balance sheet to run off, and that's just the road to normalizing policy. With the economy regaining all of its lost output, inflation running at its highest rate since 1982 and the unemployment rate dropping down below 4%, there's plenty to justify policy normalization. Financial markets are now fully pricing a March rate hike with a further 3 move expected during the course of 2022. So having a better understanding of why crypto and stocks are down, you have to ask yourself this question. Has anything fundamentally changed with crypto? Did we get some unforeseen regulation or law that prohibits US citizens from investing into the crypto market? At the time of recording this video, the answer is no. Fundamentally, nothing has changed. Yes, we did see a crypto.com hack, which they did give all the money back to anyone who was exploited in there, and then they came out with an additional fund to protect users moving forward in the future. Nothing has really changed for crypto. Taking a look at this graph here, we're also getting some additional report that consumer loan balances across the industries are also fully recovered from their COVID fall. Consumer loans are still going up, and people are still borrowing money even since pre-pandemic levels. A Citigroup analyst, Keith Horowitz, said, seeing the results makes us incrementally more more optimistic about the loan growth trends. So with all that being said, what are we seeing now in the markets and what should you be doing as a newer investor? In my last video, I did mention that Ethereum was a lot easier to time some of these swing trades. We did see Ethereum approaching $2,100. So at least a lot of members within the jungle of our Discord were waiting on that bounce right here for Ethereum to go down below $2,000, which would have been a strong buying opportunity for many investors, just because that has been a support level we haven't seen since the most recent crash of the crypto market. Now, what we're seeing right now is although Bitcoin did have a little bit of a recovery today, we're still seeing a delayed effect going into many altcoins now. What this means is, as an investor, if you do have some ammo sitting out on the sideline and you guys have been listening on making sure you take out those profits when the markets are getting overly greedy just a few months back before we start to experience this tumble, and you do have a little bit of liquidity left, you want to consider looking into those fundamentally sound projects that have done nothing wrong at all but have just gone down because Bitcoin and other equities have gone down as well. A few weeks prior to the events leading up to today, we've been emphasizing the importance of decoupling and seeing how the effects of that is going to transition into the year of 2022. If you don't know what decoupling is, this is pretty much the idea that if Bitcoin goes down, we're not going to see all altcoins tank either. But obviously, even just based on the last few days, that still seems to be the case. In an ideal situation, if we had an extra, say, $1 trillion into the crypto markets, hopefully one day we would get to that point in the market where even if Bitcoin tanks, it goes down for whatever reason going on in the world, if we would not be seeing altcoins doing the same exact thing as Bitcoin, but we would see the opposite effect. We would see altcoins actually going up in price and having a completely contradicting trajectory of their price targets. Now, with all that being said, a lot of the events have transpired over the past year, and it looks like even though right now we're hitting these 6-month lows and many people in the market seem to be sad and everyone actually seems to be fearful this time around, this is really when you want to pull it together, collect yourself as an investor, and realize that long-term as an asset, crypto just continues to grow. Taking a look at the Bitcoin's adjusted on-chain volume, you'll notice that even on a day like today, we're seeing money pouring back into Bitcoin as well. Just like any other investment across the markets, we will get to a point where things are oversold, where there will be a bottom, whales will decide to buy in, institutions will decide, okay, this is the moment of entry, and then we will see that price to the upside. Now, although altcoins are getting wrecked, if you guys do remember the natural cycle of how money flows in the crypto market, normally we start with Bitcoin. We get Bitcoin reloading back up, and then eventually that spreads into the altcoins, the high caps, the mid caps, the micro caps, and then we've also been seeing entries with NFTs squeezing inside of that mix. I don't know why this market dip is any different from the 3 to 4 other ones we've experienced within the past year. And the last time we had a market dip, guess what? We hit another new all-time high for Bitcoin. Something we do a lot on this channel though is taking a look at the TVL. And yes, at the moment, it is not looking the best. So I do think altcoins are still going to take a little bit of time to recover just because a lot of that money did get liquidated. But even right now at filming this video, we're seeing a bounce happening within these layers as well. Just a few cryptocurrencies which I would consider to be a strong long-term hold. Cardano right here, anything under $1 I think is a steal, even though Sunday Swap has been rather disappointing and there have been reports that it hasn't been functioning and performing to many people's expectations. I think long-term this is a crypto that still will pan out. Solana's still under $100 right now. Terra Luna, $65 at the time of recording this video. Scrolling down, Avalanche, which is still down 27%. I see this as a good deal right here. Polygon Matic down about 33%. Another great deal. And then even Chainlink, when this hit $13 earlier today, and it was actually suffering one of the hardest losses in the top 100 altcoins today. Obviously, this got bought up really, really quick. For me personally, investing into the crypto market has never been about making fast, easy cash today and then having a short-term hold and trying to cycle that money. This is a long-term investment because I truly believe in the future of Web3, crypto, NFTs, metaverse, and the way the entire world is continuing to innovate change. Just like how a market can be irrational, where when everything is greedy and that's when people decide to buy in, the irrationality works both ways. People can be irrational on the way out when nothing fundamentally has changed at all with any of these assets, and people just want to sell because they see the price of it going down and they're seeing their neighbors sell as well. The biggest tip that I'm going to say here is if you can't handle seeing your portfolio being down, do not look at your portfolio and try to keep your emotions at bay. Obviously, for anyone who has invested into the market and was able to exit at the top peaks and enter anytime we see corrections like this, exchanges, they'd be doing well. But for anyone who is more new to the market, dollar cost averaging, investing into the dips, being patient, it is still a very strong, viable strategy that will make you come out on top. We talked about this principle a lot. I got to mention it again. And time in the market versus timing the market is the principle that I will stick by. With the basic laws of supply and demand, when no one wants to invest in the market because they see how red it is, this is where you want to build up that courage as an investor to get off your hands and to start investing now. Whenever we get dips like this is that one chance and opportunity for you to enter where you didn't enter 5 months ago, 6 months ago, a year ago, and now you're getting that same cost basis that someone could have gotten just a while back. All right, guys. So with all that being said, as an investor, stay level-headed. We could see another market dip. We could see a dead cat bounce. We could see Bitcoin falling down below $30,000. But for me, nothing has changed. Doing the research during this time, entering the positions now, and then averaging in is where the rewards are going to pay off later down. Everyone is so about that instant gratification. They want that 100x today. They don't want to be patient on it, but it's really where you start building up those bags now, where it's going to be important and you're going to be able to create some long-lasting wealth for you and your loved ones. Now, guys, let me know down below in the comments what you guys think about the market now. Let me know what your financial situation, how bad is your portfolio down? If it is down, are you planning to invest more? Do you not have enough capital to invest more? Or are you just waiting for another dip? For me, if you guys have been following along within the Patreon and the Discord, I have been buying up the dips over the past few days, and I've been confident in some of the positions that I've been entering as well. If you want to gain exclusive access to that, don't forget to check out the link down below in the description. And at the end of every video, we always do a code word, and the code word for today is going to be Dons. Comment down below Dons if you guys made it all the way till the end of this video. And don't forget to check out BlockFi. So with the market being down, if you guys plan on going long with your investment, if you want to earn additional interest and you realize, hey, if I'm about to put money in now, I know I'm gonna hold it in here for a while, no matter how much the market tanks. If you use my link, you'll also get $250 in Bitcoin for funding an account. Now, guys, thank you all so much again for watching today's video. Don't forget to follow me over on Instagram at CreditBrian, listed down below in the description. Follow me on Twitter at Brian Jungi. And other than that, have an amazing day.